It.
What's going on, guys? This is Random Rabbit podcast number 17. We're coming to you live from Earth. Yes, this flat planet of ours is where we reside. We are here with Random Rabbit Wyatt, Random Rabbit Jeremy.
I'm gonna burn you as a heretic.
Thank you guys for coming on.
That's what I'm gonna do.
It hurts. It hurts.
I'm gonna
And
burn him as a
so,
heretic, right at the stake. Quick kill.
hey, unless you could prove it or not prove it, either way, I won't believe.
And if you float, you're a witch.
You know what I'm gonna do? I'm gonna put Josh on a boat. And I'm gonna sail it out into the horizon, and we're gonna put a video camera, and I'm gonna watch to see what happens when he doesn't die at the end. That's what I'm gonna do. Then when you get back to me on the other side of the planet, like you come up behind us, be like, oh hey, what's up, Josh?
And I'm going to be like, guys, I defied gravity. It was
Yeah.
crazy.
Guys, dude,
I was on the
flat.
other
It's
side.
nuts. I
It's
went
completely
underneath it, bro.
flat. Yeah. No, I started walking backwards. This was nuts.
I was moonwalking backwards underneath the earth.
All the blood just went straight to my head. Like that was the only part that didn't fix itself.
Yeah,
So,
for the couple of hours I walked, with all the blood pooling in my brain.
I almost
Perfectly fine.
almost just passed out right there. Just no way to survive that one.
Fantastic.
Okay.
So,
It's
And with that, we jump into the news. Take it away,
All right.
Wyatt.
all right. So, first thing on the docket today is California needs to find more electricity as blackout risks rise. So the California Independent System Operator, or CAISO, is soliciting power producers across the West to sell more megawatts to the state in July and August in anticipation of region-wide heat waves that will substantially boost electric demand. So what does this mean? Well, right now we have in California is about 2,000 megawatt shortage to where they would view the comfortable margin, and that comfortable margin is judged by nighttime, which is when we usually lose a lot of solar power and things like that being collected and produced. So there's a bit of a deficit there, and 1 megawatt can roughly power about 750 homes to kind of give you an idea of how much power that is. Um, and they're just having conversations about what might happen over the summer if rolling blackouts could be imminent as a result of grids going down. The states of Washington, Texas, and New York have had to do similar things over the last month, both in shutting down parts of their power grid at strategic times or asking people to use less power or buying more power from other states to supplement the power that they can't produce within their local grids. And in California specifically, the severe drought we're facing is not only hurting crops up in the north, such as the almond fields, but it's been a reduction in hydroelectric generation that's stopped about 1,000 megawatts of production, as well as 300 megawatts of gas fire production that was expected to not be online this summer already. So California is looking for lots of places to buy energy, and when you have multiple states that don't have energy and have to follow similar policies to cover their grids, it just kind of makes the problem a little bit more a little bit bigger because you don't have so many people to buy more power from. And it's just kind of a look at as we move forward, right? We have to deal with a lot of different sources for why we have power, more so than just demand. We have to deal with factors that push up higher amounts of demand, and we have to make sure that we're able to maintain those levels of power. So as we move forward, we need to make sure we can cover all of those requirements so that we keep everybody with power throughout the times that they need it. And really specifically, this is just saying this summer, if we have rolling blackouts, that would be why, because there are power shortages in the supply. At least for the summer. It's not going to continue on past that. They really only think it's for the summer because of the heat waves, because of how much energy people are going to use. So this isn't like, oh my God, there's no power. It's just summer. Kind of like short-term news.
They always take advantage of summer. I mean, that's
the electric companies, honestly.
What
They're
is it,
gonna
Jim?
be killing out of it, especially in Texas.
Oh, yeah. So they've had to do the same thing after the winter storm that blew up Texas's grid, and everybody had to pay a fortune for it. It's just interesting. As things get hotter, people use more power. How do you supply that? If you can't supply within your state, you buy from somebody else. But if a bunch of states can't produce enough, eventually there might not be somewhere to buy from. So I just thought it was an interesting thing, especially because I live in California now. So I thought that was interesting. For anyone that lives in California, we're watching this on the West Coast. Hey, how you doing?
and no, that's
Did
why
you
we
know-
live over here in Ohio, where it's safe, where it's
Except
our
for all those
God-given
funnels of
country, where
fast
liberty
spinning wind.
and
Yeah.
justice, thrive through the country yard. Yeah, absolutely.
That's right.
No,
It's California just like it's like you get to California, and then justice just stops functioning right there. That's the end of the freedom line. Once you get to the edge of California.
That's where you drop off the map.
To just disappear. Eventually, California will break off from the United States and float out and join Hawaii, kind of as an island.
Clearly. And then Hawaii would just become stronger. A more diverse nation.
Absorb it.
Oh,
It's
yeah.
like even a bigger, like a giant Hawaii. Hawaii 2.0.
California's destined
So this summer,
location.
watch out for if you do really the main message here is if you do see rolling blackouts in California or Washington or New York or Texas, that's probably why. Because there isn't enough power supply. There's a lot of demand for a lot of usage, and they can't find the power to buy from other places.
Interesting.
So keep that in mind.
Good to
All right.
know.
Next up is Google's hit with their antitrust suit over their Play Store. So dozens of states have filed an antitrust suit against Google related to its Play Store policies and how much that it takes. And really the reason for that, not so much just in how much it takes 15 to 30%, but they really want to target Google because they say, oh, it's just too big because it's become one of the gatekeepers to the Android markets and so many people use the Google Play Store. And they're facing other litigation. They have also in 2023 they have a case being brought up against them about antitrust with it comes to their search engine, how powerful it is, and how much of an advancement they have in the market, how much of advantage they have in terms of ad revenue because of that search engine, because of their advertising practices. But these are going to be really difficult to execute against Google, and I don't even know if there's really grounds for it here because with unlike Apple specifically, where the Play Store argument makes a little more sense because they only really have one Play Store for the entirety of all devices. Android phones have many other platforms. Google is not the only app store, and there are other ones that are open source that you can use. Even though Google might be popular and easy to use, there are other options. So I don't think Google's going to face a lot of flack for this. Don't think they'll go to court, but I don't think that these lawsuits will hold in some degrees because I think that it doesn't really apply here for Google, at least in this instance, what they're specifically looking for, because they are part of an open source kind of network of options. So it's a little harder to argue that they're cornering the market when there is no there's no way they trap you in, and then there are other players that can interact with those clients.
It's all about Android devices. It's the future. Once everybody gets away from the baby, Apple and the Feed Me phones and the things like that, then everybody.
Phones?
Oh yeah, it's the phone that does everything for you.
Oh, like literally. Okay.
I mean, it's simple. They
super-
want user interface feasibility, something easy for them to look into and use.
Oh,
But
I completely understand Apple. Like for people that don't really either know or want to really have to deal with a lot of if there's a problem or there's all these different settings, Apple makes it very easy. Apple's user interface and their operating system streamlines, and they sell on the purpose of not only looking sleek but being a sleek OS. Just being a streamlined consumer-based product. The only problem is that I think when it comes to technology, it's better to know more about the technology, and it's better to have open source because you have so many other options for scalability. That's one of my personal reasons why I don't like Apple. Plus their business model, how they price things and how much it costs them to make versus how much profit they extract out of it, I think is crazy.
I mean, the thing is that when it comes to Android and Apple, for developers, it's much easier to put out an app for Google Play Store than it is to put out for Apple Play Store. And that's just the whole premise of it, because Apple just has so many more criteria that they need to fulfill.
Right. Exactly. No, in that case, yeah, I do agree that and that's why that's why one of the reasons why Apple says its App Store policies should be protected and aren't in violation of any kind of monopoly or competitive advantage, is that they use it to provide security for their clients, make sure the apps are going to integrate well, they're going to be usable, and they're going to be secure, as opposed to when you're on these open source networks where you have to do your own research. You have to make sure what you're downloading is not something that's a virus. You have to make sure that what you're downloading is going to be compatible, that it is working, that's not just some knockoff piece of garbage that isn't going to work and just wants to gain access to information to crop data from you. So definitely agree with that.
Exactly.
But yes, I don't think Google's really going to face anything, any big hard backlashes though from this, because I think there's many options for them to say, hey, there's other people you can go to, there's other markets you can go to. I just think it's interesting because that's the latest news that was brought up today.
Exactly. I think it's just something to occupy their time with. It's not going to go far.
Yeah. Besides, Google did settle with the UK and then did agree to reverse using third-party cookies on a lot of their software across all their all their different browsers. So they were working on that anyway, starting it's supposed to be like 2023. They pushed it back to anyway. So they've made some changes anyway. So and I think there are some good changes that are valuable there, but I don't think this is going to really have material impact on Google.
Google, Alphabet, they're still a good stock to invest in. They're always going to be there.
Google is their search engine is amazing. Google is a staple in the internet community. So
Oh yeah,
that's a good long-term bet.
hands down.
All right. So we'll move on to the third one here, and that is the Fed recognizes that they may need to start pulling back support for the economy a little bit sooner than they expected. And they cited stronger than expected growth this year, which is obvious. And I think this is more evidence that they're using like backwards facing data, because it just seems like every time they have a meeting, like they're catching up to what the market already sees, because the market's trying to look forward. And it looks like the Fed might just be using data that they only look at historical data. They don't try to extrapolate forward. They just strictly stick to what the historical data is telling them. But this kind of offers a sign that maybe on the next meeting, July 27th and 28th, that we might see more formal deliberations, more actual kind of constructive conversation about when dates, of bond purchase, slowdowns might actually occur, when they actually kind of start pulling back on how much they're spending in the economy. And they've acknowledged at the meeting too that even though they still believe in to some degree that this inflation is transitory, that that they understand that if consumers and businesses see elevated numbers for a long enough period of time, and they begin to see they begin to develop an expectation of inflation, it could become one of those self-fulfilling expectations where it might not actually be real, right? That we might actually be able to get through it, but then people see that, so they react in such a way that drives prices higher and pushes us into that reality, right? Self-fulfilling. People basically scare ourselves and then behave in such a way that forced it to happen anyway, even if it was or wasn't going to happen. And really, there's two major camps here that are kind of splitting up in the Fed. You're seeing people that are saying this is still necessary and this is all temporary inflation. It's all good. And then you're seeing people officials in the Fed that are kind of saying, well, actually these numbers are pretty high. Maybe we should start moving a little bit faster. And it appears that the maximum employment goal is the last thing standing in the way. So the Fed said they want to see inflation above 2%, they want to see sustained 2 to 2.5% inflation, and they want to see maximum employment. Those were the three criteria that really needed to happen for them to start scaling back on bond purchases. And it appears that with the inflation the way it is, those goals have probably been hit. So maximum employment is the final test to pass, and they're saying we're still not there yet. But out of the Dallas Federal Reserve, they said, listen, they argue that you can't judge the labor market based on the pre-pandemic labor market. You must use a neutral labor market. So what does that mean? I'm not an economist, so math they didn't really talk a lot about the math, and I don't really understand it down to that level terribly. But what they really do is they look at employment as a natural employment pinned to the population, and then actual employment fluctuates around the natural employment line. And when you look at them overlaid with each other, and you see this, you actually see that both of the patterns are actually overlaying each other to within 0.3 of a degree of measurement there. So their argument is that there actually is full employment coming, and that we're averaging about 565,000 new jobs a month. So even though we currently just hit a record at 9.2 million job openings, what you're seeing when you look at that 9.2 million job openings and you compare that to the 9.3 Americans who were unemployed roughly back in May, you can see that it's like almost a 1-to-1 ratio. So based on these numbers, it shows that there's actually a much more stable labor market. So it really depends on how the Fed decides to look at the labor market. I found that as an interesting argument, because depending on what data you're using and how you're looking at it, you can make arguments for a different picture. And in that case, if you took the Dallas Fed's argument here that labor markets are actually a little bit tighter than we think they are, and we're getting closer to full employment, you could see that argument being a reason that they would start rolling back those bond purchases and that support earlier. And interest rates are still expected to be, 7 out of the 18 officials think that they'll raise interest rates next year. Most think that they will definitely do it through by 2023, at least 1 or 2 rates increases. So we definitely know interest rates are going to be going up over the next year or two, but the bond purchases are still a mystery because they're very vague, and they say we need to see, much more substantial progress in the labor market, which isn't really a very clear or precise measurement. They just say they haven't seen it yet. So we don't really know when that's going to happen, but I thought the Dallas Fed's argument was interesting, and I think over the next couple of months and few meetings, we might start seeing them shift into a more precise measurement of bond repurchase program weaning off of the market.
Wow.
Yeah.
All right. So after that, our next topic up here is that China's cracking down on domestic firms being listed in the United States. And what does that mean? China wants to China doesn't want so many companies listing themselves on the United States exchanges, and they want to kind of rein in because they want to keep tech companies and all that data as part of like state-owned assets. So companies like Didi, Alibaba, and Tencent are under immense pressure to perform and are immense pressure by the government in regulatory actions and investigations. And the State Council said in a statement Tuesday that the rules of the overseas listing system for domestic enterprises will be updated, while it will also tighten restrictions on cross-border data flows and security. So what does that mean? National security. The same thing that we've been seeing, right? This isn't anything new. We've been hearing this out of China now for ramped up for the last couple of months. But the problem is that we're seeing here is that China can move very quickly. So if China decides to update policies and laws, they can update policies and laws very quickly, which could change the way dynamics in the market and could affect prices. Because at this time, we have about 250 at least Chinese companies listed in the United States. That makes up a $2 trillion market, including 8 state-owned companies, Chinese state-owned companies. And a lot of investors put a lot of money into the ADRs, right? And these are the American Depository Receipts, which allow U.S. investors to actually invest in other companies in foreign countries without having to actually buy stocks there. The banks and brokers own the shares, and they issue ADR securities backed by those shares. So they can allow the markets to have liquidity here while having to not have every single investor have to go through the complicated process. So they worry that market could start to dry up and there could be some hits there. And the Invesco Golden Dragon China ETF, ticker PGJ, lost about a third of its value since February. So that just shows that you're seeing a reaction in the markets to this and fears about future IPOs and current companies that are listed. So the Nasdaq listed company Weibo may take itself private after its operator parent Tencent came under investigation. And Didi is down 20% and is not allowed to accept any new user registrations until the Chinese cybersecurity investigation has concluded. So there's still about 60 Chinese IPOs listed to go down in the United States. And that was at the end of April. So, it's not like there's a big shutdown happening, but the thing to look about here is as these laws develop, we might start seeing funds and investment entities start to kind of move away from these things. You might see ETFs taking hit. You might see individual companies taking hits, depending on how fast China moves with this. So something to pay attention to, especially if you have exposure to Chinese companies or funds or ETFs that track and trade these assets.
So, yeah. Which stocks would we worry about? Or
like I said, so Didi, Alibaba, and Tencent are 3 big examples. Some of the most widely known. Weibo is a company I traded for a little while. They might go private as a result of this. So you just really have to look at all of them, but mostly tech companies, because China's mostly afraid of tech companies. So it really isn't any other sector. It's mostly technology, because China views its data as its sovereign national, like a state asset. So, if they're on other country soils and they're somehow sharing data or data is being passed along, and they're getting to see into those operations, that makes China very uncomfortable. So they want to crack down on that. And the IPO of Didi, by the way, China said, don't do it. Don't do this yet until we investigate you. And they went ahead and did it anyway because they had pressure from their investors. They said, we give you a lot of money. You better IPO. We want the return. And then now they're under investigation from China, down 20%. And they're not allowed to take any new users. So no new registrations. So China said, no. Chinese government said, you're not allowed to do that until we're done with the investigation.
Grounded.
So, yeah, exactly.
I know there's a lot of investors out there that are very wary about being in investments that have to do with the majority of the shareholders being in China. So that's where it's going to be another factor in if you start investing in these Chinese companies, because
mostly
you don't
Chinese
know
tech.
What happens. Yeah, Chinese tech,
Yeah.
definitely.
Mostly Chinese tech. So just be aware of that in the markets, because again, China can move very quickly because they don't have to go through as many regulatory hurdles. So if they want to make laws and tighten these laws, they can just go ahead and do it. Within the next couple of weeks to a month or two, we could see major changes that could have material effects.
I mean, we saw the hedge fund that lost billions of dollars, Archego's fund. They lost billions of dollars on betting on these tech companies in China. They were well over leveraged and they got wiped out. They're now a case of what not to do.
Right, exactly. So China's government has a lot of power and a lot of reach, and they can make real effects happen. They can force real changes to occur. So if when you're in the market and you're investing in these assets, just to be aware of that.
Good to know. Facial recognition.
Yes. So the last topic for that I'm bringing up here is facial recognition and how most importantly how people are trying to trick it to gain access to people's assets or to commit fraud. In the past year, thousands of people in the U.S. have tried to trick facial identification verification to fraudulently claim unemployment benefits from the state workforce agencies, according to identity verification firm ID.me. Between June 2020 and January 21, they caught 80,000 attempts to fool selfie government ID matchups, and this is to get like benefits for unemployment, right? Using other people's faces or masks or images to try to spoof the system and put in fake claims so they can receive money.
Wow.
And yeah, so it's pretty nuts. But,
I did not see that coming.
yeah. So and right now so facial recognition is technology across so many different platforms used for everything from passports to IDs, making payments. Uber uses it to authenticate that the person who actually is driving on the account is who they say they are to stop people from trying to share accounts. People use it. Governments use it to authenticate tax returns and that you are who you say you are when you submit documents or receive documentation. And all of this is linked to apparently a fast-growing crime known as synthetic identity fraud, where you're not actually taking that person's identity per se, you're collecting a bunch of real and fake information to create a new identity that allows you to spoof the authentication systems and actually gain access to assets and things that you would normally have if someone was taking your identity. And this allows access to digital wallets on phones. It gives you access to high security areas. So places where instead of having human guards, right, you have a computer system whose job it is to scan your face and say yes or no. You know, you're valid here, you're invalid to enter this place. If you can spoof that system, you can gain access through one of those systems into a place that's supposed to be secure, right? In the UK, people are wearing asymmetrical makeup to fool the cameras in urban areas, so they can't track their faces because they can't see past all the makeup. And in China, two people apparently stole over $77 million by creating a shell company to sell leather bags and sending out official-looking invoices that were fake. And they fooled the government's tax office facial recognition software used to authenticate tax returns. So they were actually they stole a ton of money. They've been tried. I think they were caught and they're being tried for this, but they were able to successfully do it, which is very very interesting.
Fair game.
Right, and actually one of the most common methods for doing this isn't even that advanced. You can cut out the face of the person and cut out the eye holes and wear it as a mask. It'll read the picture of the face as the person, but it will track, because usually a lot of these things use your eyeballs movements and blinking to track if there's actually a real person. So you could, if you do it, you can actually simulate that you're a real person with this face. And some people even bent the pictures to add depth to the face to work a little more effectively. So it actually acts like a three-dimensional image, and it's that simple. So some of the methods to address
these look creepy.
Right? Yeah, but I mean, it works if they can read the whole face.
Who's making these AI robots? As in, like,
well, that's the thing. The way
can it identify plastic?
Well, so that's the thing. So that's interesting. So some of the things you can do to redesign these AIs is because these have been known weaknesses for a while, right? They're just being exploited, and we have to go through the process of fixing them. And you can either update the underlying like AI model, so rewrite the algorithms, or you can go ahead and try to train models by giving them as many examples of fake instances and fraud as you can. The only problem is when you get to individual people, right, it's not going to work for each individual person. Like to train a model for you to do that, you'd have to be putting on tons of disguises and tons of, alterations. So your model was trained specifically for you to know, like, I know what Josh's face looks like. Like, you can't fool me. Like, I know exactly what it looks like. And one company though, that company ID.me, they have gotten down, and by the end of February, they had gotten down the number of fraudulent claims that slipped through down to single digits, which is down from over 1 million when they started doing this operation. And some of the methods that they have used to do this is they've labeled fraudulent images, and so they've labeled them so that their apps can better identify them and similar images. And they also track phone numbers and IP addresses of repeat offenders, so they can watch them across multiple accounts and identify where the source is coming from. And they've even written some part of their algorithm to, as you said, to deal with like different textures, because they assess how the light bounces off of skin and off of different materials, so they can try to detect more more factors in the environment around you, right? Not
Nice.
just how the face specifically looks. So it's very interesting. Facial recognition does have, I think, a long way to go. It does have many uses, but definitely, I thought it was just a really interesting topic and a really interesting conversation.
Yo,
Thanks
it's
for sharing
wild
that.
how far people will go just to get money.
Oh yeah, I mean it's free. Because think about it, how much work does that take, and how much risk is that relative to the reward, right? It's very little,
I
right?
mean,
Very little,
if you do
little work.
one, might as well do multiple. I mean, how many people can you have live in a single address? Who knows?
Well, that's what I'm saying. That's why the systems get more and more advanced, but you have less and less people actually able to do it because they're not getting, they're not, as clever or good enough to beat out these more advanced systems. But it's not even just for like the government specifically. Like for your phone, if someone took a picture of your face and really wanted to get in there, and you had facial recognition, depending on what was used, because for Apple they use 30,000 points to do a depth map, right? And they have special cameras that are able to project this so that they have their own custom proprietary facial ID software, whereas opposed to many companies and stuff that just use your local camera, which doesn't have depth perception, doesn't have those points, and uses third-party software. So for like personal devices, things like that aren't like at huge levels, very advanced, that would be the most susceptible. So someone got your phone and got a picture of your face, you use facial recognition, cut your eye holes out, look through it, all of a sudden, boom, boom. I got access to all of Josh's Decentraland.
Right? Or just
Man,
hire
assets.
someone who's amazing at doing makeup. There you go. Or
That's an advertisement for Jeremy.
Jeremy will
or
do your
just
face up to
do,
fool any system.
or you could just be like Arya from Game of Thrones and just put someone's face on. And there you go, facial recognition.
If you carve off another human being's face and lay it on top of yours, I guarantee it's gonna work.
I feel like that's
Wow.
illegal.
So if you really
Wow.
want that paycheck, bro, you gotta get slicing. Just you know what I mean? And you want to get deep enough so you get enough skin so the light
and
doesn't
that's
pass
why
through.
there are easier ways or better ways, such as hacking. So
Right, that's why people
fine.
use code because they don't want to go around like murdering. What are all these dead people without
I
faces?
feel
Oh.
sorry about bringing up Arya now.
Yeah, Ari would have done a great job though in the age of facial recognition. Would have done wonders. For the rest of us, we have code.
And with that, we'll go on our first break. And when we come back, we're going to talk about Fidelity. We're going to talk about some more stock grid information, and we're just going to dive right into everything Jeremy. Doom, doom, doom.
We're going to get into stock.
Live. And welcome back.
All right, we're back. So let's go over some stock market stuff. So what happened today in GME and AMC? AMC, one of the big ones. AMC went down today 9.79%. So we're going to look at our buy sell orders in Fidelity.
Wait, Josh isn't here. Oh, there he is.
That's where I'm wondering.
I can see two of you though.
There you go. All right, so we're going through our buy sell orders in Fidelity, and we see that even though AMC dropped 9.79%, we could see in our Fidelity stock that these are, by the way, only shares that are passed through the brokerage Fidelity. So we can see that there were 21,000 buy orders and 11,000 sell orders. So what happened here? Well, we know that the majority of these of the stock market is going at the moment through dark pools. So at the moment, why don't we see AMC with nearly 2/3 buy order, 66% buys, meanwhile 33% sell. Let's look at GME with 12,000 buy orders and only 2,800 sell orders, yet it still went down. So if we go over to, by the way, let's look at GME really quick on our iBorrow desk. We can see on GME in our iBorrow desk, the shorts are closing out their orders little by little just from interactive brokers. So on the 18th of June, availability was 4,000, and now the availability for shares to be shorted on GME is 350,000. Now, if we just go up there and change the ticker to AMC, we could see an even crazier chart. So AMC is also one of those meme stocks, shorted stocks. And again, today there's 1.4 million shares available to short. On the 21st of June, there's only 70,000. So they're little by little closing up their positions. So why don't we go to stockgrid.io? This is what's happening in the dark pools. So in the dark pools, we can see that if we go to our furthest right point, we can see July 7th. And this is just the volume from FINRA. So we have total volume, 52,000 volume occurred on, well, that should be higher for AMC. AMC's average volume is 158 million. Today's volume was 95 million. And so we can go down and check it out for AMC with its short volume at nearly, if that's what I'm reading correctly, 52,992.49. And the short volume is almost half of what it is. So short volume was pretty high up today. And if we go down to the blue chart right below the first chart, we can see that, again, it was nearly half of the volume in the dark pools was short volume. All right, so we can go to threshold list and see that AMC is still on the threshold list for the 6th of July and the 7th of July. So today they tried knocking it down as much as possible to ensure that they're able to close their positions at a better price. The lower the price goes, the better it is for these guys that shorted the stock. So tomorrow should be an interesting day. Tomorrow should be the last day they're able to close their positions from the first moment they enter the threshold securities list. We know that XRT was on there at the same time that AMC went on there, and XRT closed about 100% of its shorted shares. That's saying that it was pretty up there at over 230% shorted, and now it's at 163% shorted. So there's, again, the power of the threshold list. And that's where we're going to go on to what's happening in our reverse repos. So reverse repos were down from last week's $991 billion down to $785 billion. What's really surprising is our 10-year treasury rate. It's at a low of 1.33%, and that is extremely low for a 10-year treasury rate. So the government right there, if we look at the treasury bonds, the 1, 2, 3 month, 6 month treasury bonds are at 0.05% or 5 basis points. and the reverse repo is still at 5 basis points. So our government's not doing too well in the Treasury Department.
Hmm.
So aside from that weekly report that it's been getting worse in the reverse repos and the Treasury bonds, it's been getting worse. But we're going to go on to something going to be it is FINRA comments on short interest reporting is to enhance and so what's so FINRA is requesting comments on potential enhancement, and number one, they're considering the modification to its short interest reporting requirements. Number two, a new rule to require that participants of a registered clearing agency report to FINRA information on allocations to correspondent firms of failed to deliver positions. So they're going to have to report their failed to deliveries. And it's not going to be like, oh, we can hide them now. No, they're going to have to be like, hey, we got them. We can't hide them from you. We're just going to say outright what we have. So this goes back to the ability to change the on the books from their short positions to long positions using complex option strategies, such as what they've been using as of lately, sales of a call option and the purchase of a put option at the same price, at the same strike, which are being used to hide synthetic shares. And so this was filed on June 4th, and the comment period ends August 4th, 2021. And hopefully that's going to give more stability into the stock market and give more of a level playing field. But it's a pretty exciting rule that's going to be coming to play. And once that's published, it's going to be much better for the market because it's more visibility into the market. So, and it's just an overall other potential enhancements related to short sale activity. So before we were only able to see short sale activity month to month. Hopefully we'll be able to see it daily now instead of everyone trying to scrape stuff from dark pools and things that are just very difficult to get your hands on.
I like that. Doesn't make life much easier. You have much more granular data in short sales
Exactly. And
instead of hoping you're correct every month. You check every day.
exactly, they're going to be like, well, what's been happening? And see, that's the thing. Even with these new rules that came out, like NSC 002, which is supposed to say, hey, we're checking you, or the DTC 005 saying, all right, well, you can't hide your short positions anymore, and you're not going to be able to get away with your complex option strategies, as it's supposed to, because clearly it's not working. And if we were to look at, like, one of our wonderful technical indicators of on balance volume, we can see that it's just, again, not working. It's still up there. There's no selling pressure, and yet the stock's going down. So that's it's hopefully
We part of the market can't see that we probably should be able to, because if we can see the resulting price action of something that occurs, right, we can see the prices moving. If we can't understand or see the data that's making that occur, is the market truly as fair and as transparent as it should be? Because if there's a world of data that exists where big plays are being made and we can't actually gain access to them, how are we ever going to accurately understand why some movements occur? And if movements are occurring without us having the ability to understand or research them with any data that's available, then how is that a level playing field for retail investors? Doesn't make any sense. There's a giant explosion of it. That's not fair. If everybody else knows, we all should know too.
Exactly. So that's where, what I found that was pretty interesting is I've been looking at different brokerages, and Webull has a pretty cool one where you're able to see let's see, it's right there. where you're able to see the position cost distribution. So, as a matter of fact,
Wait, are you gonna put that link in there so Josh can throw that up
yeah,
on the?
I was either going to put it in there or I could share my screen.
You could, but then you'd just be a tiny window on the stream
Oh, okay.
because you're sitting like
So,
next to the thing. So yeah, there goes Josh. He's got it.
there you go. We're able to, and then if you right click on there, you can find position cost distribution. If you right click on the stock and you press display, and let me know when you find GME on there.
No, Josh, go. Well, first look for the GME stock. This isn't GME.
Yeah. So if you go to the
Yeah, right there.
second from the bottom, stocks tab,
GME.
put GME, and
Okay.
and on the chart, you right click it and go down to position cost distribution and click display.
Yeah.
All right. So you're seeing it right now?
Yes. It's a distribution.
Yeah. So you can go from the left and to the right, and you can see the added orders per price point that has been added on, and which I find fairly fascinating. Actually,
These are at different times.
yes, at different times you could hover over the candlesticks and just see the different added shares per the distribution. So positions per the cost distribution. And I just find it fascinating that, there's information out there that I'm still finding out. And it just adds on to how everything's going in the market.
Absolutely, that's really cool.
So I find that really cool.
It's a really cool feature.
So that's on Webull and TD Ameritrade. That's all I know. That apparently they're on there. So I just hopped on there, and you don't even need an account in order to check this stock out. So, look into different stuff.
Man.
But I love these sites that just give us more information, and this is the vital information that we need in order to keep track of these stocks.
It's crazy how these stocks change with this like giant pump and dump.
Yeah, and see, the thing is that even though GME and AMC are going down, we even saw in the Fidelity that there was way more buying pressure than there was selling pressure. That just takes into account how much of a grip dark pools have on the whole market. So, and if they're still naked shorting because these guys don't care about the price to be paid and the fines that would incur from doing illegal activity, that means they just haven't had any litigation put against them that they say, hey, this is not even adjusted into our risk management portfolio. This is actually something that could get me into jail.
Yeah. It's interesting. Average cost, closing price. Yeah, I think that's interesting. It assumes that all shares are. You always have to make sure you take it with a grain of salt too, because it does assume that all shares are owned by investors, that all float is owned by investors.
Mm-hmm.
But I think it's really cool. Definitely something to look into.
Cool. Yeah.
As a part of your informational database, I think that's a good idea. I think that's really cool. Wow.
Okay.
I see Wyatt captivated by the first time he's seen this.
I like it. It's presented nicely. You know what I mean? Like it's just so.
At each price point, you can see the added shares.
My next step is if I can scrape it. I'm sure I can, and then we can use it.
Perfect.
I can inspect it and find an API. That's cool. That's very cool.
It's
Very cool.
having happy dreams over here. But that's my finance section.
Okay.
YouTube.
Very nice. Very
So
nice.
many of these things.
Now, for the last section, it's going to be Decentraland.
Yeah. Tell us about it, Josh. Tell us about Decentraland.
Alright, so this is going to be the title. This is where we're going to start off. If you're interested in trying to find out how you could get into this music festival, the one that's going to be run by Ethereum, ETF, you're first going to have to, at the very beginning, and at least do, is create your own character, which is fun. I kind of just log in and go through the steps of how to, you can customize what customization you want, different clothes, face, hair, shoes, earrings. Don't take the Thunder one. I already took it. It's mine. And from there, you just start exploring. You have to get used to using the keyboard to move around. If you play other types of like RuneScape game or like Sims, you're gonna catch on really fast. And so, what I recommend is you want to check. Also, it's gonna be called, what is it? Onto the Moon. Is that what it was called? Let's see. So what you want to do is you want to go over to Decentraland website, and then you also want to do the events. And from there, you're able to, let me just show you guys. So you need to do two things. You need to create the event, and then you want to go to Decentraland events through the website. From here, you're going to go down to July 11. It's right here, known origin to the moon. All right, I was close. You're going to click it. From here, add it to your calendar, and then you says want to go. And this is where that MetaMask comes back in handy. The MetaMask is the only way. It's the best and easiest way right now so far to keep all your profile and to have your wallet or your mana easily accessible because you're directly already connected into your MetaMask. And so that's going to be your way to getting into this known origin to the moon music and art festival. So really cool if you want to see how it is to just move around, and if you are not motion sickness easy, I say check out this video that I might put up. I do recommend that you guys get a better graphics card. I'm currently using a Mac Pro, and it is not taking it very well. And
Garbage.
so,
Who said that?
no, I already know. I know it doesn't have the best of graphics card. It wasn't meant to handle, virtual reality, but
I meant because it was Apple, but that too.
It works for everything else perfectly fine. And so if you guys do want to enjoy, like, I guess the music festival to its fullest, I recommend you guys probably investing into a graphics card that you can use. You're potentially going to continue on this, so purchase one for the long run. Wow. Ooh. And just check it out. It's kind of interesting.
Decentraland's cool. It's still young, so a lot of things don't work, and there's a lot of empty space, and the games you play will be very glitchy in some degrees. I played a game where you're supposed to throw coconuts at other monkeys from the back of a truck, and I could never figure out how to make it work, and then I randomly would throw coconuts every now and then I would fall through the map. So it's cool, but it's young. So, if you're going out there expecting it to be finely tuned, it won't. But if you're going to look for an interesting experience and something that will probably in time become refined, then yeah, Decentraland is...
The more virtual reality comes into play into our society, I believe Decentraland is going to be one of the prime locations that you will be able to just walk around and check out NFTs and anything else that they'll be able to put in there.
It's definitely like a first mover.
It'll turn into a turf war.
Even if Decentraland doesn't end up being the main one and it just becomes like a proving ground, it's still interesting. I mean, I've been on there. I couldn't buy any mana because they blocked my credit card from buying my Chase was like, yeah, we're not gonna allow that to go through. I was like, why? Because all of a sudden I just randomly trying to buy some cryptocurrency over here. And,
Trust me.
Yeah, exactly.
Trust me.
I have to
The
call them
banks
so
don't
I
want
could.
you to switch your money into cryptocurrency. Heck no.
Well, they just no. It's just such a weird purchase.
What are
'cause
you
they're
doing,
like, wow,
Wyatt?
so you're over here buying like some food, some groceries, and then you're buying this one obscure cryptocurrency too. Oh, that sounds like definitely normal behavior. Like, no, so
That's
it's
just
so
like-
far
Someone
outside.
took your card. They
Yeah,
say
they're like
you're crazy.
that's what they're assuming. Like,
But-
yeah, because I didn't even buy when I go on Coinbase. I don't even buy with my credit card, right? You link your account and just send capital.
Yeah.
Like that's the first time my credit card's ever been like used for crypto, and my chases like that doesn't seem like
I was
normal.
freaking out.
It's like it was trying to protect me though, so thank you for trying to protect me. I do appreciate that. I appreciate.
Banks will do something.
Thank you, banks. You depreciate my money and you hold it safe. At least you do
Thanks,
something.
JP Morgan.
Yeah, they get more money off of reverse repos than we get off of CDs if we put our money into it, or even interest.
That
Where
is
we have
that.
0.001% of interest when we put our money in the bank. But hey, thanks for stopping us from fraud.
Yeah, I mean, okay,
Yeah.
it's black and white. You can't if you have to do black and white, it's complex. Like, yes, I hate that they don't give us a fair return, but at the same time, I do appreciate fraud protection on my credit card. So, I think everybody's at net
Yeah.
sum of their
Yeah,
wins and
it's
their
like,
losses. So fuck JP Morgan for one thing, but thank you for
Yeah.
this other thing.
It's
You know what I mean?
like take my money, invest it into things that you know is going to make you more money, and then boost your balance sheet.
Yeah, I just happy because I don't want to hold all my money in my hand, like in my pocket somewhere. And I guess I could move it to another account because my plan is to move it out of Chase and move it to like brokerage accounts and stuff. But and then when I move to like brokerage accounts like Fidelity, thank you if you have credit card fraud protection because I've always wanted a Fidelity credit card. So thank you. I mean, I'm sure I'll be like fuck you for something else, Fidelity, but thank you for fraud protection. I'll take that all day.
There you go. There you go. But
And
that's good. We'll keep track of Decentraland.
You gotta take what you can get, man. And yeah, we'll keep track of Decentraland.
And with that ends Random Rabbit podcast number 17. If you guys have not seen our YouTube, we have hit 100. You guys are the best.
Woo!
You guys, thank you for all the
114
support
subscribers.
for the
Thank you.
live
That's right.
audience that faithfully the 2 for 2 or the 3. You guys are in our hearts. You guys feel
matter
it.
the most to us.
And for everybody else who subscribed, thank you. This has been dope. We're definitely just starting off, and hopefully we just keep rocking it.
Yeah, man.
Fun
Don't worry,
stuff.
we're gonna be around for a while. So you keep bringing them. You keep coming back. We'll keep giving you stuff to watch.
And we're gonna have that Dogecoin giveaway, and so
Yeah, please, seriously. Josh is really giving away money. He's giving you free money. You just
and
gotta play Apex or hang out as a subscriber.
people. Yeah, I'm like, please talk to me. I'll pay for you. Like seriously,
If Josh would let me win the Dogecoin, I would take it from him all day long. But I'm not allowed since I'm part of the channel or something like that. So you guys have to do it. You know what I mean? Come on.
it's written. It's a written code.
Yeah, I'm not allowed to partake in the challenges because it's not really fair. But you all can. So
Join
get
us.
some Dogecoin.
Join us whenever, if you guys ever see us playing video games, just squad up with us and you can win 50 Dogecoin. And every extra kill you get an extra 5 Dogecoin.
And we've actually paid this out before. There was a video of us doing this for someone that joined us, got us a win, and not only did we pay him the Dogecoin, but we helped him set up his entire account. So there's precedent evidence that this is going to happen.
We help you from step 1 of, hey, I don't have a wallet, to step 5, hey, I now have, I'm now a proud investor of Dogecoin. I shall hold this to the moon.
You'll be kicking yourself if all of a sudden, a couple months from now, Dogecoin hits like $10 on some crazy, something, and you didn't
I'll be
win
crying.
like 100 of them for free.
I would be
here
crying.
at Random Rabbit.
That.
Josh will have a bad day because then I know that's when everybody else is going to come on. Like,
gosh.
so Josh, I remember you guys talked about 60 Dogecoin. Now that it's $10, you think maybe how many kills did I get? I got 12 kills. Josh, pay out. Oh,
It's gonna be like all these really big players. Like, I want to play. No,
leaguers
no
get
more.
in there. Like, we'll get you wins every game back to back, but you have to sign a contract for 20 games.
No,
Like,
whatever
I
you
don't
want.
have
There
that
you
much
go,
money.
guys. If you're not convinced yet, you should be.
You should be. That's right.
Yeah.
If you're not convinced yet, well, you're wrong. All right, your
Exactly.
opinions are wrong.
No one likes. No, if you don't like free money, then I'm wrong. Okay.
Hey, I'll take
Jeremy's
that
never
money.
wrong. So
I'll take that money. If you
are
hate it.
wrong.
Exactly. I'm doing a pretty good bet. Heads I win, tails you lose. Okay.
Exactly. And then if it lands on its side, the universe explodes.
Then I
It's right
know
like that.
we're in Gotham with Two-Face.
Loaded quarter, bro.
Well,
Waiting on the edges.
guys, as always, pleasure. You guys have a great night. And Random Rabbit audience, we love you guys. Peace out. Come back tomorrow when we tell you even more.
It only gets better every time.
There's only more information out there. Keep tuned.
Keep
That's
it
right.
fresh, guys. Peace out.
See ya.